over to you.
Good morning, everyone. I think the last session truly was a very positive end, and it sort of makes me happy to say that we are looking at that kind of an outlook. And so let's get started now that we have completed our Kissa Kursika, who's sitting where. Yeah. Okay, so good morning, everyone. We have a very, very diverse and eclectic panel. I mean, Geeta doesn't need any introduction, MSDF. She's been one of the pillars of the ecosystem. Gautam from the growth stage. Gautam, I'll not take your bluster away, so I won't talk more. Dr. Diwan is literally the pillar of India's biotech ecosystem. And Rohit comes in with some very interesting climate-focused investment perspective. A question will surely come post Trump's decision. So we have something very diverse from very different backgrounds, very different sector focuses, as well as stage. So it almost represents what we would like to see in the private unlisted space. So on that note, I actually don't want to talk too much. I'm from IN, just to make sure that I cover who I am. We are an early stage seed and early stage investing platform. We have an angel group. We have a couple of VC funds. We are probably, surely in India and probably globally, one of the rare angel groups that has actually partnered with a government body, which is BIRAC, which is called Bio Angels, really focused on developing and unlocking early stage private capital. We are sector agnostic, but investing usually in emerging sectors with a very risk mitigated strategy. And we are currently in our second 1,000 crore fund, still doing the hard job of raising, which is a pain, but also deploying. So, and I'm a little happy and a little relaxed. Companies are doing well, portfolios are doing well, exits are happening. So on that happy note, Geeta, over to you. You have a very unique and a very long, deep perspective from where you come. So.
Sure, and I do bring in a different perspective. So just as Padmaja was saying, I represent the Michael and Susan Dell Foundation. So it's actually a family office which has a genesis in philanthropy, but it allows us to do impact investing. And which really means that we have, of course, done grants in the non-profit space, but also done investments with enterprises that cater to low-income populations. And I think when you look at the demographic of India, there is a huge potential in the mass markets. So, talking about high growth sectors, I mean, we've seen in a lot of our investments, mainstream investors come in like, say, a Sequoia, City Ventures, a TPG, and follow on, and made excellent returns. And really, I would pinpoint a few sectors which, may look like impact, but at the same time have a huge potential for returns. One of them is relating to what I would say the employability space. I mean, today India's workforce is 400 million. Every year about 12 million join the workforce. There is 120 million or more of migration happening from, either the north to the south of India or from villages to tier 1, tier 2 cities. And when people are at the cusp of a job, there is both a need and ability and even a desire to pay for that service. So, on the one hand, employers are looking for the right talent. On the other hand, there is a large part of the population which is looking both for a right match and also for an upskilling and, and support services. So just to give you examples, we invested in a company called Air Black. It's still very young as a company, but through online means, they actually train beauty entrepreneurs in India. I think they've trained about 35,000. They've become larger than VLCC. And these are very, I would say, rightly priced. So these are not the 5,000-10,000 rupee courses. They actually charge 50,000, 70,000. And they train high quality entrepreneurs by the end of it. So, they can open their salons, they get celebrities to teach them. So the impact is huge. The demand is definitely there. The pricing is right. Their economics work out well. And now we are seeing even banks or NBFCs lending to the clients to be able to enroll for these courses. So, when you see that at the end of my 6-month journey, I'll get a job or an income earning potential, people are ready to pay for it. So I would say there has been a lot of negative news on skilling, but those might be not the best quality courses, but I think picking up the right enterprises which are offering the right services which will actually lead to placements, definitely there's a big demand, which I would say if you take a 4 to 7 year investment horizon, all of these companies definitely will give good returns. I mean, that's just one example on the skilling. I mean, I have many more on the migrant workforce, but maybe I'll come to it. The other area I would point out is the whole MSME, and I know we had SIDBI before this, they also talked about it. But again, so much of a vibrant economy at the nano, micro, SME sector, and more or easier and customized credit for them can actually again lead to growth of the economy. So again, I won't take examples, but I would say the 2 high growth sectors I see, which are very logical given the stage of our economy and the demographics. One is the employability space, the other is the MSME space.
No, very true. I think you've hit upon the 2 very critical pieces. Employability and MSME anyway is 43%, contributing to 43% of the GDP of the country. So very true. But what you're saying with your insights and over the years that MSDF has worked, you're able to not only invest, but unlock subsequent rounds of capital. If you're talking about TPG, which is a PE firm. So I think that's a great insight, and but there's a lot of depth and incisiveness that one needs to do, is what you're saying, to choose the right companies.
Yes, there have been many, many failures, yes. Including by mainstream investors, because again, I think this market segment is tricky. So you need to know what is affordable, how to differentiate quality. So yes, going in with the right insights definitely helps you filter. And I mean, maybe later I can also talk a little bit about blended finance, because in many of these sectors, there are also some, philanthropic support, concessional support, government schemes, and how private capital can actually, leverage that and yield better returns.
Yeah, so I'm going to take you up on that in the next round of comments. Gautam, purely because you're sitting next to MSDF, Geeta, purely from that. You come in from a very different perspective, which is growth stage, very different sector focus. So, as you are investing, how do you see your sector focus develop, and how do you see it actually returning monies? I mean, one of the big things that I wanted to just bring on the table in this session is unlocking capital is great, but at the end of the day, we have to divorce our entrepreneurs and create hefty alimony, right? So it would be useful, because that will only accelerate the cycle of more capital getting unlocked. Gautam?
As an introduction, I work at Tanas Capital. We are a Singapore-based single-family office. We manage a corpus of $150 million at the moment. Key sector focus for us are healthcare and pharmaceuticals, manufacturing, and enterprise software and services. All these 3 sectors are steadily growing, have large markets, but also have certain sub-segments that are growing faster than the others, are very well differentiated, but and at the same time are very appealing to investors like us. I'll first start with healthcare and pharmaceuticals. That's the sector where we have deployed the majority of our capital in. Over here, we really like single specialty healthcare delivery, owing to its focused nature of care, scalability, and high efficiency in terms of managing operations. All the 8 segments, be it IVF, fertility, birthing, or nephro, onco, at least the medicinal aspect, diabetes, are growing very well, huge runway for growth, huge industry tailwinds, both economic as well as structural. So what we personally see here is high likelihood of exits, as well as ability to generate money both through organic growth of the assets as well as through multiple expansion initiatives. Companies that have reached some sort of a regional leadership and have gone on to become a brand. That's, I'm saying, move beyond the star doctor concept to attract patient inflows, are attracting a lot of suitors, both from sponsors as well as strategics for consolidation. Coming to manufacturing, it's a very broad sector, but strong theme. Over here, we feel growth will be in certain pockets, both across the old economy industrials, as well as emerging advanced manufacturing. Across old economy, we really like specialty and paper packaging, owing to it being a proxy play to consumer in India. And on the new side, precision components, be it for aerospace, defense, as well as medical devices. Technology, again, very broad. We focus mainly on the B2B enterprise side of things. Here we really like enablement software, banking infrastructure, as well as cybersecurity. Assets or companies that will win in this space would be those that we feel where the tech is on par with global standards. Highly localized plays or those with subpar tech will struggle to scale. So that's where we stand over here. For investor point of view, huge opportunities, especially across Series B and C. It's practically empty, but entry valuations are a huge challenge. Likelihood of cracking GTM for these assets is very difficult as well. But we feel investors who can underwrite the correct business plan with the right amount of money are going to gain. So that's where we stand.
Very interesting. Just a quick question, Gautam. When you speak about pharma and healthcare, you spoke about a lot of companies, businesses with top line and bottom line. But this is a sector which has a lot of IP-driven models, right? Is that something that you're interested, or how do you view that?
So from us, at the moment, we are staying away from anything where we have to take a commercialization risk. So we are backing sustainable business models at the moment. So any IP-driven at the moment is out of our focus. It requires much more nuance. Manish would know.
Yeah, that's true.
Yes.
I think Padmaja is hoping for some exits from you.
Yes, why not? But Dr. Diwan, over to you. I mean, you understand the biotech space better than any of us.
So I think I represent a sector which is more patient-driven, and it also asks for more capital, patient risk capital. And it is IP-led, knowledge-driven industry. The knowledge that typically gets generated in the R&D institutions, which needs to translate and come out towards commercialization. So that is what we do. We promote the entrepreneurship in the biotech sector, which is interdisciplinary, includes health, agri-tech, climate, sustainable future, replacement of, let's say, the non-renewable resources, replacing with renewable resources for sustainable future. For example, the petroleum or the fossil fuel is a precursor of close to 60,000 chemicals. That is the starting point. Now that industry is dependent on this non-renewable resources. Once it is exhausted, we need to have some alternative driven, right? So to drive the entire chemical and material industry. So that is the segment which biotech can intervene. The enzymes, the proteins, vaccines, monoclonal antibodies, precision medicine, precision agriculture, taking out a gene, inserting a specific character, making things resilient, carbon capture. I think that's a spectrum of where we work at. And to do this, a lot of infusement happens. We need to promote first generation entrepreneurs. So we've been able to do that successfully. Today, there are 8,500 plus biotech startups in the country. And they all need funding as well as infrastructure to work. So we have seeded close to 95 incubation centers across the country, 24 states and UTs, so that local talent can actually utilize the local opportunities and bring out excellence. Along with the funding infrastructure, we also bring networks, partnerships, and different modes of funding from grant-in-aid at the initial stage, so we de-risk, and help create a pipeline which can look at eventually for Series B and Series C, which is actually totally almost like grossly missing in the ecosystem in this sector. But there is substantial spikes, let me say green shoots, which have been able to catch everybody's attention. COVID was one example where we got 4 different platforms demonstrated for COVID vaccine, and they got emergency use approval. A lot of diagnostic kits got generated. So the ecosystem is mature and has yielded that much. In fact, the other COVID-like virus where we were all got excited in the China, so a metapneumovirus. So the kit for diagnostic of that, it got rolled out on 7th of January. So it is available now, certified kit. So the ecosystem has gone there and brought some demonstrative evidence. So is the CAR T cell. 2 therapies have been now approved in India. To do all this, we have been able to bring around some policy infusements, push that for the deep tech. This sector requires a special attention. Just like fund of fund in SIDBI, we need a thematic fund dedicated to create impact and to grow such industry in India, so that they can nurture to a scale, and then people in the forum can get a pipeline for investments. Thank you.
No, thank you. I think honestly, I've seen BIRAC at work, walked many of the incubators that you spoke about, met many innovators, and truly I think there's something quite original happening. I mean, I don't get tired of saying that a lot of other government departments in the country or outside for that matter could actually emulate what you're doing. But I do want to ask you a question right here, and I can almost see Gautam and you forging some sort of a partnership. I'm sensing that. But you know, one of the things that we've often talked about, you and I, is the government is putting money in different ways and different amounts, but it's all early stage. And we are talking about unlocking capital. What's your view, or how do you see perhaps private capital or development funding from other sources unlocking? Because what you are breeding ultimately needs to grow, otherwise it's not going to be of much use commercially and for the people you want to impact.
So I think 2-3 things. One, just like government kitty is always minimal. It is always finite and limited resource. So we need more people to partner. If you see value in this, what is happening, I think people get connected. For example, Indian Angel Network got connected, and we created a platform called BioAngels, where syndicate investments can happen from anybody who's not expert in the, let's say, biotech domain, but has spare capital and can have some bit of risk appetite, and collectively one can make or break one technology to emerge as an outcome. We did some bit of fund of fund. We have 16 daughter funds in operation. We thought that we will be able to get close to about 2x of what we invested, which is 300 crores in the biotech ecosystem. But within 7 years or so of its operation, we get to see close to 5,500 crores getting infused through private capital and private investment through this venture fund activity. Based on this, we reached out to SIDBI, we reached out to DPIIT, we reached out to different platforms.
The powers to be, you mean?
Requested them and shown this example that out of 1 lakh crore which is committed for the deep tech startup ecosystem, can be a portion small amount at 10% of it, so that the deep tech startup ecosystem can grow in the biotech sector. We've been integrating and also contemplating next rollout of that fund of fund. But I think what we as Government of India, as enabler, we are only promoting a step forward in this direction. It has to be picked up just like a baton race by experts and investors, heavy investors, both from India as well as outside India. Previous panel said that we are seeing a trend happening for repatriation of unicorns. I think next 10, 15 years, what we envisage, our bioeconomy moving from 150 billion to about 300 billion by 2030. And what is current contribution to GDP, which is 4%, that would go up to 10% by 2047. But this can't happen unless we all come together and make use of this opportunity.
True that, true that. So Rohit, you're really focused on the other critical piece, which is, to my mind, called AQI, in other words, right? So you want to just share what you are doing and how you view the sector that you're focused in? Why it interested you to get it?
Oh, how much time do you have for the why? No, I had to sort of ask myself what would I like to have be my life's work, and calling is reasonably personal, and investing in climate really appealed to me. And within climate, one has to stay within one circle of competence. And for me, it happened to be 3 or 4 industries I had the occasion and opportunity to work in deeply. And those happen to be mobility, built environment, consumer goods, and circularity. And that's really where I invest in the climate space.
Interesting. And you started investing.
Yes.
Excellent. So what do you think, how would you sort of, you're investing, how would you unlock more capital behind you? I mean, companies need to grow, right? So any thoughts there? What would you like to see happening in this space?
Yeah, so in the limited time I've been looking at investments in climate, like most decadal plus opportunities, I've noticed it has very non-linear tailwinds, which means this is a problem and it will stay dormant and in the periphery of everyone's investing activity for a while. And at some point of time, either the consumer demand or the policy environment will dramatically change for it to become a very strong investment case. Knowing that it has this non-linear, I would say, attractiveness curve, I think what would be on my wish list is an understanding of the non-linear curve, which means if you're building a firm focused on climate, whether you're on the tech side or the business model side, you've got to appreciate you might be in it for the long haul. Success will come. It could sometimes happen sooner. It could happen later, but that's the luck of the draw. But can you survive the long haul and be at the right time when the tailwinds come and sort of lift you up? And to survive the long haul, the form of capital you're looking at or the capital stack may be very different from the capital stack available to businesses where the market is developed, demand is developed, policy breaks are there. And you may have to look at those alternative forms of capital to make sure you survive long enough for that tailwind. Now, those could be one of many. It could be philanthropic capital, like the Dell Foundation. It could be governmental support, like happens through the BIRAC. It could be strategic capital, which may take the form of equity investments. It could take the form I've seen of customer advances. In my corporate role, I've done that. I've prepaid for a year's of orders or 2 years of orders in advance and said, okay, you need the money, take the money. Go ahead, keep building the firm and your products in my business and as and when you need. So it's almost like a prepayment, right? And it could mean prepayment from or sort of credit lines from suppliers. It could also mean working concertedly one day at a time with the policy environment to get the breaks, the tax breaks, maybe some sort of concessions that make your business viable till that inflection point happens where you get those tailwinds. And I'll stop at that.
Yeah, I think what you say I hear, but I do want to ask you a question because, and on a serious note really, with Trump's first day executive order of sort of reducing climate-focused money, capital, right? How do you see that impacting whatever is getting built here? Because you're right, climate is a long gestation play. It could require high infrastructure capex money, and its ability to even start making money, forget for the investors, for the company, could be much longer. So what's your view? Because obviously this is a hot topic, and if we have to unlock more climate money in early stage or growth stage, there has to be late stage as well. So how do you see that? I had warned you, I'll ask you this question.
I know we're in the age of drill, baby drill, or at least the week of drill, baby drill. And I also know a lot of people believe in the tooth fairy also. But the thing about pseudoscience is that science eventually catches up. It may influence the mood of the moment, it may definitely influence the sentiment, but look all around us. You can't pick up a newspaper on any given day and not see the effects of the changing environment. You live in Delhi. The most fun game in Delhi for many people has been, can I drive my car today or not? Is it Grab compliant or not? Fallout of that is going to happen irrespective of what Trump says. When we're buying our next car, if we choose to buy a car, many of us will say, okay, at least I'm not sure about electric, but what's the harm in paying a little bit more and getting a hybrid? True. Because I know I won't be forced to. I think sometimes it helps to get your head out of the news cycle. And let's see. Because it is to some degree of pseudoscience. I'm not saying there's not merit in that. The economy still runs on fossil fuels. But it is some degree of pseudoscience, and science will catch up within a quarter, within a year, and there's no running away from reality.
True that, true. So I'm just going in the reverse order, if I may. Dr. Diwan, I think you covered a lot of points, and how BIRAC is trying to engage with private capital. But the reality of the situation in the country is that growth capital, especially for pharma, healthcare, even to that extent for climate, is not available, largely not available in this country. I mean, we have very few Gautams who are looking at this space. And we have to have our entrepreneurs, and we've at IN, we've been struggling with this, to be honest. We are having to say we look at the US or Canada or other parts of the world. Now, when that happens, and especially when it is government-promoted companies, there is this whole issue of flipping, right? No large investor wants to invest in a country where in another country, they want the IP to move to their own country, right? It has to be native for them. So how do you sort of see this from a government's perspective, not only from BIRAC's perspective, that we've taken the early risk, we've put in the money, we've done all the mentoring, et cetera, and when the value creation happens on an IP creation especially, or the company itself, it's actually moving out. And obviously from a government's view, from a government's perspective, you want to retain this. So that sort of impacts what capital we can unlock from other parts of the country, other parts of the world, I'm sorry.
I think it's a sensitive point, and a practical view also, the ground reality. We need to change this, and we need to do it collectively. For that, few of these things, what we've been trying is that we raise the initial capital availability within the country for the ecosystem. We are also reaching out to outside India to show that India is a destination for investment, and we've been seeing through Make in India National Mission, a lot of investments are driving into the country. Those are fast-moving sectors, but even in the biotech sector, we've been seeing new GCCs getting established in India, new corporates coming in. There is the funds, AIFs now have partners, LPs who are from overseas. So there is direct, indirect capital which is moving in. Through foreign missions also we are working that, and they are also looking India as a place, as an innovation hub where solutions can emerge for them for deployment in emerging markets, which essentially is India and other economies. So there is a recognition that some opportunity is sitting and we need to tap. It is, I think, collectively we need to make that awareness, sensitization, reach out, integration of like resources overseas to kind of bridge this gap. There's no one solution to this
True
issue.
that, true that, yeah. So Geeta, you know, when you were talking, you obviously had points which would be very interesting for the audience, especially the challenges that you've sort of seen for companies, for raising capital, for growing them. I think I'd love to hear that because you have a deep insight there.
Yeah. Actually, before going to the challenges, let me talk about the opportunities.
Sure.
I mean, this panel is on high growth sector, and I would say high growth and maybe high returns hopefully should come hand in hand. And I would say when you're looking at high returns, sectors that have proven themselves will give you, reasonable returns. So you have to go after sectors that are still emerging or markets that are still emerging, which does mean high risk and high returns. And I would say as a family office, if you're looking at those sectors, how do you mitigate some of those risks? And those are really the challenges, right? Because many things are unproven. And I think I would actually piggyback on what Dr. Diwan was saying. There's an ecosystem that the government is also trying to build, or let's say, the surrounding space is trying to build, because they're also seeing the green shoots. So figure out where incubators are coming, what are the subsectors that are being promoted by the government. The government is also doing fund of funds, so from that pipeline, it's easier to pick up the brighter spots and take it away. And I think that also then starts completing the value chain. You have incubations which come up with government or philanthropic support. Even CSR is allowed for that. Then you have accelerators, which is a mix of it. Seed funds in some sectors may need some concessional subordinated funding, but then the market capital picks up. And then growth stage, you're already proven in the market. But I think as family offices, different from funds which are, chasing a 8-year exit cycle. Yeah. Family offices are in a unique spot to actually spot these longer term opportunities. Truly patient and yield very high returns at the end of it. So I would say, there are several green shoots emerging. We all talked about a few sectors. These are all emerging sectors. But I think as you get into it, how do you overcome the challenges? See the emerging signs from the government. There are a lot of guarantee schemes the government is doing, fund of funds, incubators, R&D support. I think seeing where also some partners can come in. Now they may be philanthropic partners, family offices itself from another wing can actually do concessional funding. But again, I'll go back to one example on financial inclusion. When India's stack was just very new, then out of IIM Ahmedabad, CII, which is their incubator, they actually tried to recreate the whole value chain. With philanthropic funding, there was a lot of evangelization of using India stack for solutions for low-income people on the financial services side. That was all philanthropic funded. Then they created an incubator, then an accelerator, a seed fund, and a final fund.
Bharat Fund is exactly
yes, Bharat Fund was the end point. And through that chain, there were different types of capital. And I would say, I think, that like just being part of that value chain and seeing you're completing the dots is important. And again, on the blended finance side, I would say like SIDBI has CGTMSE schemes. We talked about TREDS. Again, there are lots of guarantee benefits, other benefits that are coming out in the ecosystem, being able to take advantage of that and then moving forward. I think that's how you actually unlock better growth and better returns. Otherwise, doing more of the same will give you the same returns. So.
Actually, very, very true and very complete. We almost have the continuum represented on the dais, just by the way. But Gautam, quick question in the interest of time. You know, you're sitting outside of India. Two questions, one which the audience might like to know, the other more to get your perspective. Do you see challenges in FDI coming into the country? I think that's an important piece. And on behalf of certain people in the audience, are you open to being an LP in Indian funds? Audience there, thank me, whoever's raising money.
Yes, I'll tell you where I'm coming from. As family offices outside India, we do specifically those that don't have an AIF or an investing entity here. Two ways to invest. Either we become LPs in funds, or we come in directly invest directly to the FDI route. Becoming LPs in funds, easy, but you cannot choose the underlying asset to invest in. Investing directly under FDI, there are issues at the moment. Specifically, it's very rigid, less flexibility. Without going into details, there are issues in terms of fair market value calculation of shares in corporate and down rounds, as well as
RBI issue required.
Yes. Very low flexibility in terms of using costly equity instruments, even CCPS.
True.
You cannot even do an optionally convert debt. What I'm saying is that you're limited to only equity without an AIF. You cannot even do an optionally convertible debt. Yes, so that's where I am. In terms of opportunities, FDI is a problem, but ideally, some high growth companies over here could look to actually a bit contrary, could look to incorporate outside India for ease of fundraising. So that's what we feel. So.
Yeah, interesting. I think we should chat how we can get you on as an LP and architect what you want to do. But that's a different point. So, you know, we just have 3 minutes. I'm going to quickly wrap up. I think some very incisive points were made by the panel. I just want to add a few. I think unlocking money for high growth capital needs more money. That's the most important thing. We're, you know, especially for early stage, growth stage money. So we've been sort of thinking about actually pushing the ecosystem, be it government or private, I'm not choosy, that I think there is a huge need for secondary fund to happen, because a lot of the funds across the industry are looking for exits. And unless they can return money to investors, more money is not going to get unlocked. So I think one of the big things is, and we would like to also push the government to say that the 10,000 crore fund that they did has actually unlocked another 80,000 crores. So a secondary fund would be hugely impactful, not only in terms of numbers, but I think the impact that it could have to unlock more private money. So from the 1 lakh crore, which everybody is eyeing, I think that could be one piece that the government could anchor. The other piece, more to, you know, maybe music to your ears, Dr. Diwan, we've been pushing that, yes, please do thematic, please anchor thematic funds, right? Be it deep tech, be it biotech, be it a split or combination. We're not fussy, we just need the money. But what we'd suggest is actually allow daughter funds to be 10 plus years, you know, 10 plus 1, 10 plus 2, whatever, because deep tech is long gestation. And here, if we want to emerge as a global player in deep tech, and we do have the opportunity, I think a lot of our industries are waiting for innovation and actually scaling, right? I think the government can actually focus by giving 50% of the daughter funds to the daughter funds, anchor it like that. There are, of course, Israeli models that we've also suggested to say, come in with perhaps lower returns, cap the returns, so private investors, be it Indian or global, actually see higher returns, and that will unlock more money, which has worked for Israel. So that's the second big thing we've been pushing. And we think in IAN, we've seen this need like it's a hunger to. I think the biggest issue unlocking capital is one part, but I think for any startup, any business to get going, there are really two critical inputs, resources. One is money, which I think we spoke about quite a bit on this dais. The other is really talent, right? If there are people, good, high quality people, money will come, and the reverse is also true, that if there's money, good quality people will start going startup. I think if we want to have innovation and technology and grow high growth sectors, and I think Geeta mentioned, Geeta sort of indicated this on the pain point areas, some of the pain point areas to actually lift the country. I think we have to be able to retain talent in this country. And that's a big issue. I think a lot of our high quality talent move out. So, and not only because of IP issues, for ESOP issues, for value creation, for growth, all of that. So I think taking this topic, which I think was very well thought of by the TIE team, and thank you, TIE, for having such a great panel from different perspectives together. I think it is not only high capital that needs to be unlocked. I think what is needed is retention of people here, talent here. Without that, I don't think we'll be able to really unlock what we want to do, unlock for the country. Time's up. Do we have any time for question, or should we just wrap up? Upasana, around? Yeah. Anybody questions? You have a great panel here. Take the opportunity. Upasana has given you a quick opportunity. Okay, I think. Please, please.
We can talk among ourselves probably. I think one is we are worried about the talent outflow, but there is another positive side which is we see every day. There is inflow of talent, inflow of the experience from outside India back to India. And that is happening, increasingly happening over a period of time, at least in the sector that we represent. The innovations, to develop innovations, that development experience is not much in India, the pharma, healthcare side. And that experience we need to imbibe and bring in. Expats coming in, the businesses coming in, they are seeding R&D innovation hubs there. So I think that is also building up. The public-private partnership like this, what Padmaja spoke about, I think that will create the flywheel mechanism and churn out more outcomes.
Yeah, just to be a little controversial, right? I think there is another piece of talent, like if you look at AI, Gen AI kind of talent, which is moving to the Middle East. Sometimes you want to think it's just 3 hours away, we might as well consider Middle East or Dubai at least as part of India. But the reality is that's where it's moving out, right? So, yeah, but you're right. There's a lot of biotech, healthcare professionals looking at this country. I think it also is a very large market, growing market need, yeah. So on that note, thank you very much and for patiently listening to us. Thank you, audience. Thank you, panelists. Really, really diverse views, and I learned something, for sure.
Thank you for moderating, Padmaja.
Thank you.
Thank you very much, panelists. Thank you, Padmaja, for a great, great panel. I think we've got absolutely wonderful sort of nuggets here on one is how and where this whole unlocking capital is going to take us. I think very promising panel, so to say the least. Thank you again, Padmaja. One picture opportunity, please. And I would also like to thank many of you who've made time to be here. Before we go forward, just a very short and small mention for one of our members who is actually celebrating his birthday today and has chosen to be here with us rather than being anywhere else. Please wish a very happy birthday to Manish Srivastav of Alpha Value Investment here. Manish, wish you a very happy birthday.
Manish, stand up.
Huh, he's standing. He's only not raising his hand. Happy birthday, Manish.
I hear you buying us a round of drinks.
So up next, of course, we move to a captivating fireside chat, which is going to be on evolution.